We would think India was actually looking quite favourable, particularly as we headed into 2015. And the reason why we think India looks quite favourable is how international investors are going to be treating emerging markets as an asset class. And over the course of 2013, 2014, India made some difficult decisions on monetary policy and on fiscal policy. Those decisions have slowed the pace of economic growth as we headed into 2014, but now they're starting to pay important dividends. Inflation is falling, the budget looks stable, the current account deficit looks stable, and as we move into 2015 and get closer to the Fed commencing its rate hike cycle, these will all be important developments suggesting capital flow stability. But more important, as we head into 2015, we're seeing international commodity prices fall, and fall quite significantly. And if that dynamic is sustained, then the narrowing of the current account deficit, the improvement in inflation, is likely to continue into 2015. And this suggests that the relative outlook for India is quite secure. So with growth recovering, inflation lower than many people were expecting, and commodity prices a very beneficial dynamic for India, I think the outlook is quite favourable at this time. I think the key thing to remember is since the taper tantrums of 2013, which affected India, Indonesia, and those other emerging markets that have the so-called twin deficits, there effectively has been a 2-year repricing of assets. So by the time the Fed actually starts raising rates at the end of Q1 or Q2 next year, we would have seen the US dollar appreciating for 2 years. We would have seen the Indian rupee at a much lower level than what it was over the course of 2012 to 2013. And that has effectively repriced risk. When the Fed does move on rates, I think it will probably be the most well-telegraphed economic decision that we've seen in a long time. Nobody will be surprised when the Fed moves. So the fact that the Fed is moving because the US economy is strong enough to be able to absorb rates, the fact that the US dollar is going to be an important adjustment mechanism, absorbing that move and leading to probably emerging market currencies being weaker, I think it will be well absorbed. But certainly in the case of India, India is in a much stronger position now than it was in 2012 and 2014. There's been significant improvements in inflation. Investors are looking at Prime Minister Modi and looking for further fiscal consolidation there. So I think the outlook is actually quite favourable that the actual Fed hike rate cycle will be well absorbed. The final point to note on that is, I think, a lot of the market concern that somehow when the Fed starts raising rates, emerging markets have to follow in lockstep is misplaced. Previously that was the case, but the key reason for that was emerging markets and emerging market economies pegged their currencies to the US dollar. So they had to automatically follow the Fed. We don't see that anymore. There's not pegs, there's not quasi-pegs. So when the US does raise rates, it will probably be raising rates alone. There's no mechanical requirement for emerging market economies to follow the Fed higher and commence or extend rate hike cycles. India is clearly making the right decisions and the right policy choices. And one of the most exciting things about Asia at the moment is a number of governments have seized upon the opportunity of falling commodity prices to radically reform subsidy structures. Last week, Indonesia almost completely removed their retail fuel subsidies. Malaysia has also moved to remove their fuel subsidies. So I think investors, when they look at Asia, are coming to expect that more will be done on fuel subsidies. I think that will be an important step. But, you know, subsidies are very, very sensitive, particularly in India, as an economy where there's a lot more people on subsistence incomes. And also given food is very much heavily subsidised compared to other Asian economies where subsidies lay on fuel. So I think international investors from a global growth perspective will probably be looking at what India is going to do on subsidies. So the 2015 budget is probably a key indicator. Investors are looking to see the momentum of Modi's reforms continue.